The Disney stock took another hit on Tuesday, May 5th, 2020, after they announced how badly it's been for them with the coronavirus lockdown. This hit obviously comes from Disney's theme parks division, and it started from back when they closed down their operations in Shanghai, which was way before they closed down Disneyland and Walt Disney World in the US. Now the question is the Disney stock still attractive? Should we buy more and hold on to it? If so, what's the best price to buy the Disney stock at? How low can it go? And finally, how long will it take for it to recover so that we can finally take profit? Today, I'm going to analyze the Disney stock from 5 points of my signature Invest Diva Diamond analysis, which analyzes the markets from 5 different points: technicals, fundamentals, market sentiment, your risk tolerance, and overall how it fits in within your unique portfolio. My name is Kiana Danielle. I'm a 3-time author and the founder of the Invest Diva movement. If you'd like to get my updates, you know what to do. I'd also really appreciate it if you could like this video and share it with your friends to help me with my mission, which is to help moms around the world take control of their financial future and make their money work for them. I create investment strategies for over 50 stocks for our premium investing group members, or the PIG members. Here on YouTube, I try to cover as much as I can on a weekly basis, but if you'd like to get my strategies on more assets, including stocks and cryptocurrencies and Forex, make sure you check out my masterclass at learn.investiva.com/yes to see how you can join the Invest Diva movement. Now let's go and analyze the Disney stock to see if it's still a buy. Let's take a look at Disney's fundamentals first. As you can see, Disney has so many different divisions, and ESPN actually remains the crown jewel of Disney's media network segment, which now includes the recently acquired Fox cable entertainment channels like FX as well. But Disney's other components rely on the world-class Disney brand, which is incredibly sought after and really well trusted by parents around the world. As we talked about before, the COVID-19 really made its biggest negative impact on Disney's theme parks, because otherwise Disney's media channels are actually thriving during COVID-19 while people are on lockdown, and they're probably streaming in to watch more and more of their content, right? Now let's talk about Disney's theme parks for a moment. So when it comes to Disney's theme park and how long the COVID-19 impact is going to last, I want you to ask yourself this question: will you ever go back to Disney World with your children? How much do you trust Disney? How paranoid are you about COVID? I'm not trying to be bipartisan or taking any sides, but this really is a personal question for you to answer before you can confidently go ahead and invest in a stock that you want to basically keep a piece of these shares. So will you, for example, there are rumors right now that Disney World will reopen in Florida on June 1st. Will you actually go to Disneyland on June 1st if it reopens? And if the answer is no, then there's a chance that there are other parents who are on the same boat as you. If the answer is yes, then again, there's a chance that there are other people who are going to go. But another thing you want to keep in mind is that in the US, especially in Florida, we have people who are not taking the COVID-19 seriously and will jump on Disneyland in a heartbeat when they reopen. One more thing that I want to keep in mind with the Disney theme parks is that, okay, let's say that they do reopen and you do not care about COVID-19 and you don't fear about it because there is a treatment available or vaccine is created or something like that. Will people have enough money to go to Disney World? These are all the questions that you have to consider before buying more into Disney. And that is the reason why I've now marked the Disney stock as medium to high risk, whereas before it was actually medium to low risk. One more thing that actually backs up my decision to demote Disney from medium to low risk to medium to high risk is because they actually have not announced their next dividend payment. So will they pay dividends? Because already their dividend payments is not that much. It's only 1.67%. And last they paid dividends on December 13th, 2019. They have not yet paid a dividend in 2020. So that also, for those investors who rely on dividend payments, will make Disney stock less attractive. Now, for those of you who have medium to high risk tolerance, let's see what the strategy could be for you guys. Here I have the Disney stock chart on the daily chart. I'm using TradingView here. And as you can see, the Disney stock took a massive hit once we first heard about COVID-19. This chart really resembles Dow Jones Industrial Average and all the other stocks that basically took a hit, not too massive, but like the cruise lines, but a moderate amount of a hit. The only thing that has now kept Disney from moving forward is right here, the Ichimoku cloud. If you look at Microsoft, for example, its stock price actually broke above the Ichimoku cloud and is on its way to the previous highs. But Disney was not able to break above this psychological resistance level and is now on its way back down. Zooming out on the monthly chart, Disney stock was for the longest time a very nice growth stock, and it finally reached all-time highs at $150, which is right when it took a hit. Now, if it wasn't for COVID-19, we were still expecting a little bit of a pullback because it had reached an all-time high. And every time Disney has reached a brand new all-time high, not every time, but we have seen a pullback. So back in 2016, we saw a pullback. Back in, this 2010, we saw a pullback. So we were expecting this, but not this much. On the monthly chart, the price actually tested above the Ichimoku cloud briefly. And in May, now we're seeing it kind of backing off and going back down. And because of all the reasons that I just talked about with the theme park, I believe that we could still see more drops in the Disney stock that could provide a very interesting buying opportunity. Because remember, Disney still has all its other divisions to pay for it. So these pullbacks could actually be temporary and an amazing opportunity for growth-oriented investors who can wait it out and take profit in a later day. Here I have created a Fibonacci Retracement level tracking the most recent uptrend that started back in 2009 and ended right in December 2019. Here we have all the levels perfectly, and these levels also overlap on the Fibonacci Retracement levels from this downtrend, the recent downtrend. The strongest level here is a 38% Fibonacci retracement level from this uptrend, which falls on the 23% Fibonacci retracement level from this downtrend, which also is an obvious resistance level that that Disney stock has tested over and over again in the past 4 years, and that is 99. Right now, as the news comes out with Disney's earnings, the Disney stock price is already heading towards 99. 99 could definitely be a buy limit order opportunity for those investors who want to get into the Disney stock sooner rather than later and buy their way down. Because remember, there is always a chance that COVID-19 treatment is all of a sudden and magically created, and people would just jump into the lines of Disneyland. One thing that you do want to consider is that the rumor that Disney theme parks will reopen in Florida on June 1st might actually already be priced into the Disney stock. You know what they say, buy the rumor, sell the news. So if the Disney stock is already dropping on this positive rumor, that would lead me to believe that the Disney stock might actually go further down from 99 and potentially even reach 82 or maybe even lower at these key support levels before the COVID-19 pandemic is really over. So personally, what I'm going to be doing is I'm going to be setting buy limit orders at 99, 82, and 67, and then I'm going to wait it out. How long will it take? I don't know. I am budgeting in at least 1 to 3 years for it to go back above and beyond 150. Normally, I don't try to time the market. I try to price the market. And what that means is that I try to set my sell limit orders or profit taking limit orders and then let it go. I'm not going to be stressing over how long it took. I'm going to be stressing over how much I earn. So with that, I'm going to set my profit taking limit orders at these levels. To recap, I'm going to be buying more Disney at 99, 82, 67, and I'm even going to set a buy limit order at 44 just in case. And then once they go through, I will set profit taking limit orders at 150, 170, 181, and 189 to take partial profit and cash out if Disney brings back its dividend payments, I might consider just holding Disney stock long term. Now, I'd like to hear from you. Does the Disney stock fit in your portfolio at the moment? Are you a high risk investor or a medium risk investor? Will you be going to Disneyland once it reopens on June 1st? Is the Disney stock less attractive to you now that they don't pay dividends? Go into the comment section and let me know. If you like this video, like it and share it with your friends. As always, thank you so much for tuning in, and I'll see you again in the next episode of the Invest Diva Movement.